Um, what's up, guys? Welcome to the video I mentioned I was going to do. I just took a bunch of pills, so I might go to sleep soon. That's funny. Yeah, so I had a very wonderful day, and I had the video in mind that I wanted to do. I wanted to do it yesterday actually because I was doing some study, but then because I already uploaded two videos for you guys, I felt like it would well, you guys, if I'd like an extra video, so I just decided to save that video for today. So I actually have in mind to title the video "Advanced Discount," "Advanced Discount and Primaries." Okay. Yeah. So now I wanted to talk about this specifically on oil. I can see we're reaching that $80 a barrel in oil, just like I talked about before. That is wonderful, wonderful. That's so. So, just to talk about this, I want to talk about this price action structure as an advanced discount. So, we're not going to use the cash price. I want us to use the futures price, which is CL. I don't know what's wrong with my internet. It's been very slow today, so be with me, please. Please be with me. Yeah, so we're going to use this as a reference. All right, so now you can see that we have this, and when I was watching the price, which is what a lot of you guys would have been anticipating, looking at this market, so you would see, because remember, if you want to be buys, obviously you want to buy at a level of discount. And now you can see the market trades all the way down here. Rallies typically institutional traders, people who claim they know institutional, they would want to see price straight down into this and say, let's see buys. They want to see price down into full shutter block, or those who are a little bit advanced, they would look at this and say, I want to see price straight down into this as an institutional entry draw, and then the rallies. Now let me explain when, and I'll use that as an example in gold. And I did some like down gold that was on Monday, but I couldn't post the video because again Instagram is down. But I will show you how I use the concept to take an entry gold. Again, that's why I think you guys should really appreciate this stuff I do because man, it's taking me a long time, long time to do all of these things and study and figure them out. So yeah. No, okay, it was actually the cash price, not the futures. I apologize, it was actually cash price. So because the cash price is the one we can trade on, the futures is not the one we're trading on. So we need the cash price. Yeah, that's not the futures. Sorry about that. All right, so yeah, now we have this. We've turned down to the rejection block. We're rejected. Now we know that since we're bullish and we have massive liquidity pool at that weekly old high, we already have a direction premise, meaning from the lower of the string to the higher of the string. We want to see price shoot up into that. But now, a lot of you guys, a ton of you guys would have wanted to see this form. Your divider wanted to see this as an institutional entry drill for the more advanced of you guys who are actually in this. Whilst the less advanced of you guys would have wanted to see the bullish shadow block, which is typically every single person says, "Oh, I trade institutional." They would have wanted to see this bullish shadow block, price trade down to that, and then see bullish rises. Okay, so now the number one rule that I believe will serve you as a trader is if you are buying, it has to be at a discount. If you're selling, it has to be at a premium, regardless of what you're doing. If you're buying or you're selling, it has to be at a discount or a premium level. Okay, and then this is where we talk about change in state of delivery. So let's go deeply into this, and hopefully I don't yawn throughout this. Yeah, let's talk about change in state of delivery. Okay, we have a low here, We have a low here. Now, obviously, we turn down into this where I talked to you guys about the futures contract divergence with the cash price, and you can see we split up. This typically is a signature of institutional sponsorship in the move because whenever you see price action like this, you're seeing sponsorship. It's basically the big boys you're stepping into the marketplace, and now they're sponsoring price. Now, at what point would you not anticipate this not potentially filling, or if you want to see yourself about get traded down into? Now, as we trade up into this, because we have a near-term liquidity, and I want you guys to pay very close attention to what I'm about to say, because we have very near-term liquidity in form of this inefficiency and this short-term high, our change instead of delivery for reference shifts from this inefficiency to this as a breaker because now we're trading within the breaker block. So this takes precedence over this. Now this could still happen, and if that happened, you would not technically be wrong. Okay, you always leave this on the cards as a potential. Okay, but what takes precedence is the breaker block, and you want to watch the nature price around the breaker block. Now, going back into what I talked about before, I said if you want to be a buyer, you want to do it at a level of discount. You never want to buy at premium. Excuse me, at premium. Now, what the algo would do when it gets into this level is it's going to create a level of accumulation, which is that was the word I was looking for. So when the algo gets into this level, it's going to accumulate at a level of discount. Now, what do I mean by a level of discount? You have this daily breaker block. Why is this a daily bullish breaker block? Because you have the low here. 1, 2, 3 is the swing low on the daily time frame. This is the last up candle. We ran down to get the liquidity, traded higher, and we have a range. So I'm going to use a replay tool so we can really narrow down our perception of this. I just yawned. So it tells me the pills are kicking in. All right, so now what we have right here is the daily break block. What we want to do as institutional traders is because we're still inside this range, okay, we've not broken out of the range as a retest. If we break out of the range as a retest, then obviously this would have been a discount level. Let me explain real quick what I mean. Okay, let's look for a breaking block, for example, and see how we can utilize the concept for what I want to talk about. Okay, so we have a breaking block here. This is the breaking block. The last two of candles. I'm using this, not this, because the body is a candle. The last two of candles. We extend this out. We don't really break fully and then retest. So I'm looking for a situation where we have a legitimate breaking price. Excuse me, almost messed up that word. We have a very legitimate breaking price. We break above and then we come back to retest. That is where you get your typical breaker, you know, goes up and then retest. Okay, so we have one here. We have a breaker block here. All of these down candles. Okay, what was the down candles are the range? Excuse me. That was this. Okay, this was the low. This was the low that started all of this run higher above this short-term hot. So we can extend the three candles out. Essentially, what you can see there is we break down, put it up into the discount. I think it's still the same thing. I was looking for a very good example. Sorry for this, but I don't know. Oil is not just giving me a very good example of this. This is the same thing I wanted to talk about in the one we're just looking at right now. So I really want to differentiate this. So I'm sorry, I'm going to have to pull up a new tab and look for what I want to talk about on the different aspect because oil is not just giving me what I want. So We have to look for something like let's look for something. Let's go to the 1 hour time frame, see if we can spot opportunities for the break block. It's gonna be just supposed to be lots of them. We'll need blocks, bro. Break blocks. Messing up my words. That um. All right. So we have one potentially here. Okay, so we have a low here. That's this. We have all of these up candles as we break a block. You extend the range out. So using all these three candles, you can see we don't necessarily need to get to a discount. All we just need to is touch that level because we've broken out of that breaking block and we've traded back into the range and we trade higher. So when you have this is where you can use a typical break and retest of the breaking block, not old highs or old lows. I mean break and retest. Okay, because again, this is still at a discount level. So whenever I get situations like this where price trades away and starts to retreat back into that level, it's usually going to be at a discount. But now you can. This is one way to utilize breaking blocks. The other way you want to utilize breaking blocks is this, which is what I want to talk about on the call today. That is this. When we've not broken out of the range, okay. So you can see here we've not broken out of the range to come and retest and utilize this as a breaking block. We're still trading inside the range. So when you get a situation and you can use breaker blocks like this, you don't necessarily need to predict out of the range and then trade back into the range and use that as a buying opportunity. Okay, all you need to do is to see price trade within the range, and then you identify the discount of the breaker block. I'm teaching you something new. Yeah, because the algo once the algo gets into this, the algo recognizes this as an old level of institutional uh, selling. It's looking to mitigate and then reaccumulate. So it's looking to provide opportunities to ventures to mitigate and then reaccumulate new longs. And they're going to do that at a level of discount. So the first thing you want to do is identify a range and then identify the discount of that price range. So anything below the 50% again is what we identify as a discount. Okay. So the algo is shifting into accumulation, but where is it accumulating at? It's accumulating below the main threshold of the range. You can see we have a low here. We run stops, pairing up long orders with sell stops. We go all the way up here. We have a low. We're taking out liquidity below the main threshold at levels of discount. Watch, we're not taking out lows. We don't take out lows here. Okay, we create lows, but we have boom, very quick runs on liquidity into discount price points. Okay, so prices doing that at levels of discount. This is institutional accumulation. They're pairing up, they're jamming the price lower, attacking sell side liquidity to pair up with longs, and you can see the reaction. This is showing presence from the interbank traders. The as price jams up this liquidity, the end of the market, you can see the reaction. Whenever we have a run stop, we see significant reaction. Whenever we have a run stop, we see significant reaction. That is institutional accumulation at a level of discount. But now, if you did not know about this concept, you would be thinking you wanted to see price trade down into this, or you want to see price trade down into the bull block, and then you start getting confused as to why did prices rally. Because if I use the replay tool, you're going to see we had a very significant rally, and then you're going to be asking yourself why did price rally, and you can see what I talked about. Now you would have missed this move, and then we trade up into this, and then we come back down to the high of the breaking block, and then this would have been where all the institutional traders would have been jumping in to want to catch the move. But then this is still a discount because you can see we use from high to low here. So it comes out the discount, so it's still valid, right? But if you are using this, none of you guys would have known this was a discount because you would pull your Fibonacci from this low to this high, and then you were waiting for price to trade down into this or this and look for longs. Not realizing that we shifted the state of delivery when we got into this range of the bullish breaker block. And all we're doing inside there was we're accumulating below the mean threshold of that bullish breaker block, accumulate, 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 expansion, retraces back down, and then price keeps going higher. So this is what I wanted to talk about on oil, and that was a concept I used for Monday's price action trading. So let's go into Monday's price action trading, and I'll explain the concept for you guys. Again, this looks like a twist of bottom, right? It just looks too clean for bullishness. We could easily attack the lows. It's a twist of bottom. I remember I used to trade that when team was still with smart money, and I used to think all this BS. When you see twist of bottoms, you want to buy? Oh god. Anyways, so going back into Monday's trading, that was here. I did a little bit of trading there Monday. That was off of this. What I was looking at was we ran this as a low, and I wanted to do a very short term scalp on that. And I would have posted the screen recording if only I was allowed. Now, what we have here is the breaker block. I'm using this. Okay, you can use this. You can make the point that it's this. You can make the point that it's this. We have a low here. We have a high and then a lower low, and this is the breaker block. Okay, no, I don't think I used this. I think I used one of the candles. Let's see. Oh no, I should have prepped for the call. I just came on the charts and I'm all over the place. So I don't think this video will be as interesting as the other ones. But I'm making a very huge point here. I'm introducing certain concepts one by one to you guys. I'm not just doing all at a go because there's gonna be certain things I talk about that even I think I wanted to do that same thing on your dollars today. So I'll touch on that before I end the call conversation. So this is what I did on gold, and I think where did this just come out from? So it was late New York session, right? It was this move down into this. I think was it that move? No, it was not. It was here. Yeah. So I when I saw this trade higher, initially wanted to see if you could run lower. You went down, took out rejection blocks, and then went higher. Then I shifted my bias to bullish. Again, you can see how despite a smaller range, it still thrived. But yeah, we have a bullish block. We have a breaker block, and what I was looking at was we are shifting our state of delivery into bullishness here. So because that is an higher time frame level, the algo will read this as a level of discount, and I want to do accumulation there. So what I was watching out for on gold, excuse me, on the 1 minute time frame, this was a 1 minute work. If you guys want the video, I could absolutely post that video for you guys, the execution with my stop loss. So in the video I was waiting for price to get down into this as a discount. Now it's not just like I went and say, oh, because the discount, I'm just going to buy that discount. No, obviously you're going to have to blend confirmations or confluences. And the confluence was the fact that number one, I don't want to see price trade below its low. I want to see price maintain its range. That was number one. Number two, we have a gap, a very noticeable gap here. And I want to see if we could trade down the gap and then reject. Then I'll look for a discount, a 1 minute discount to buy. So to explain the logic of my setup right there. Okay. Now, typically I will be buying there and then I'll put my stops here. But I wanted to tighten my stop loss because it was Monday, obviously, and I was not really sure if it would take out the high. So I want to see if it went deeper or if it broke market structure. And then if it did, obviously I was going to use a yeah. So there we broke market structure in this candle. All I'm simply doing is we have a swing low to high. Excuse me. And all I'm waiting for is my 61786 within this wash order block. And I did my buys right there. And my stop loss was just here. And then obviously my TP1 was very nice. Then my TP2 is obviously this. Not this old eye. I was looking past that. So initially I had something that run deeper for my TP2/3. I think I was able to get 60, 50 or 60% off. 60, yeah, it was more like 60. And excuse me, I'll be honest, when I saw this trade deeper, I was a little bit uncomfortable. But I was holding out for this because I was looking at this as a propulsion on the 1 minute time frame. And I was still a little bit fine with this because it was the main threshold of the breaker block, which is turned down into that discount. Again, so this is a discount, so I was fine with this. And what I was looking for was to see price start trading higher and higher. Again, I was fine with this. And then there took partials off before eventually price reversed against me. So again, you're not going to get this in-depth explanation. So what I'll do is I'll post the entry on the Lazarus program, and so you guys can see what I'm talking about. Now on Eurodollar, which is the last I want to talk about from today's lesson, you would have seen I censored myself on this session. I wanted to talk about it. I'm like, no, let me just chill. I think from the last video, remember what I taught you guys about uh the last portion of the market maker model and balance price ranges. Okay, talked about that. Last portion of the market maker model, balance price range. That's what we have right here. How is this a balance price range in? Well, we have every delivered rebalance. Ooh, we've talked about this before. We have a redelivery balance in the fact that we have this trade up, this candle trades all the way back down, trades all the way back up. So this candle was redelivered by this candle. So these two candles are a fair value gap. So we have a fair value gap between the high of this candle to the low of this candle, and we see price trade higher. Once we come and closing on this, it becomes a BPR, balanced price range. And those are natural levels of support and resistance. And then if we go down to lower time frame, you can see how we're respecting the range, respecting the range, respecting the range. We trade up into the consequent retracement. We're basically trading up into consequent retracement, and all of a sudden, boom, we attack sell side liquidity to complete the model. You can see again what I teach you guys exactly is playing out exactly. Every single day I'm showing you the concept and I'm showing you that that actually works. So all of this is all you need to go and do the work. With that being said, guys, I'll wrap up the video here. If you have any questions, again, drop it on the Lazarus program Discord chat and I'll reply to questions. You guys will have a wonderful night. I'll see you all tomorrow for a new session. Say, oh no.